The Marabuzo line. What is a Marabuzo line? Before we can look at the relevance of the line, we have to look at what the Marabuzo actually is. The term is applied to the real body of a candlestick that is larger than the norm. That's a fairly nebulous concept, and there's no hard and fast rule that can be applied here. An evaluation of the chart being studied and the time period used will determine the relevant numbers. Sideways, trendless trading will create less sizable movements, and therefore a relevant Marabuzo will naturally be a smaller size than in volatile markets where all candlesticks are larger. Let's be clear, this style of analysis, like all technical analysis, is not a science but a reasoned application of principle. Now, once a Marabuzo has been determined, then the line can be drawn from the midpoint of the body. In other words, halfway between the open and the close. And this is the key. As to a practitioner of candle charts, the open and close are the most important points. A horizontal line is drawn between the two and is extended to the right, i.e. into the future, where it will act as a support or a resistance point. As I mentioned before, a 50% line such as this is not drawn on every candlestick body, but is used only on those judged to be greater than the norm. Now, while that is subjective, I have found using an open and close difference roughly 50% greater than the average produces the best results. For example, if cable gave an average open and close difference of 40 pips over the preceding 4 weeks, then a difference of 60 pips or greater would have been of immediate interest. Now, those levels have to be reappraised as market conditions alter, of course, but overall, the larger the Marabuzo, the greater the importance that the resulting 50% level is likely to have on subsequent movements. Now, I must emphasise that the high and the low are not irrelevant, as they may help to form a recognisable candle pattern, but their importance is secondary. How to use the Marabuzo line. Now, basically, a Marabuzo line drawn on a positive candle will act as support, on a bearish candle as resistance. A key point is that the support and resistance is applicable to the close of the period being used, not necessarily during the period. In other words, trading during the subsequent periods can exceed the line, but the line is not considered broken until the close of the period. Now, it doesn't matter whether it's hourly, daily, or even monthly. Of course, if the support Marabuzo line does give way, then sentiment should be expected to show increased negativity, and the line itself will become resistance until it is supplanted by a new Marabuzo created by subsequent price action. Now, on this chart, I've marked 3 Marabuzo lines, although the first has, at the time of writing, not been used as a trading signal. This may yet happen, of course. The second Marabuzo line is drawn on the second down day, and this time the level 144.26 is tested on each of the subsequent 3 trading days, each time providing levels for investors to sell. And the third line comes 3 days later as the market begins to sell again, and the relevance of this can be gauged by the market's upside failure near this point 5 times over the next 7 days. Here we have a Euro-Yen chart, and you can see the relevance of the lines even with another change of time period. The first Marabuzo line was drawn on the first exceptional decline period at 114.91. After forming a low below 114 the figure, the market's rally stalled for 3 periods at that Marabuzo line before a close above confirmed a new positive tone. The line then protected the downside during 5 of the subsequent 7 2-hourly sessions. In fact, it helped form a base that then yielded significantly higher levels. The second Marabuzo line was drawn on a bigger than normal up candle after another setback had found buying interest. This line came in at 115.13 and held the downside over the next 3 sessions before the market posted steady upside. It can be seen from the above examples and from putting this simple methodology into practice yourself that using Marabuzo lines provides new support and resistance levels. Like all such levels, though, they must always be regarded as potential influences until they're tested and proved. However, the regular use of these signals provides an invaluable additional tool, and one that I heavily rely on.